Alright guys, so I'm going to be using this momentum to cover the third model, alright, the third inducement liquidity after the first break of structure only. So now this is the third model that I'm going to be covering for my A plus forex trading strategy. Alright, now this is going to be alright guys, so this is the third model, and I'm going to be showing you guys my third model for my A plus liquidity trading strategy. Now this is the third model, is inducement liquidity after the first break of structure only. Now you see that these three model are all following the rules of rule number one: there must be a strong high or low. Rule number two: there must be an inducement or internal range liquidity. And rule number three: it needs to print for you a target. Why I added this rule number three is that the target needs to be good. Like sometimes you check and then you see that the target is just going to give you 1 hour. I can't, as in the target for me is not good enough. You know what I'm trying to say? So it needs to give you a target that is good enough for you to risk your money on. If you're the type of trader that goes for 1:1, 1:2, then no problem, you can go ahead. But for me, I go for at least 1:3. You get what I'm trying to say? So it should give you a feasible external range liquidity as your target. You get what I'm trying to say? Now this rule 3 is that the inducement should be, there should be an inducement liquidity after the first break of structure. Now this is what I am saying. Let me show you guys. As always, we'll be using the bullish scenario for the first. So let's go with lower low, lower high, lower low, lower high. Then we have another lower low. You get. Then we have a break of structure. Now our first rule has been formed, so let's use this as our break of structure. Should we use this? Let's use the second one. Remember, if there's multiple break of structure, then that's added confluence for you. So let's use change of character. You know what I'm trying to say? And then there is a sweep here. This is your sweep of liquidity. So after having your first break of structure, there should be an inducement after the first break of structure, but it should fail to break the second and fail to take out the structure. Let me show you. I need to write this out. Inducement after the first BOS, but failed to create a second BOS. Okay, now I've updated that. This is the model. It should create the inducement liquidity, should create sorry about that. Let me move all this together. Well, I should just do it like this. No, let me move all this. Still moving. Okay, so this is it. Let me just continue. It's giving me a headache. So this should create inducement liquidity after the first break of structure, but fail to create a second break of structure. Now in the first video, we have something like this. In the first model, we have something like this. We have a break of structure, we have an inducement that was created after the second break of structure. They expect price to come, take out the inducement, and then go. This is our first setup. You get what I'm trying to say? This is our first setup. Our second setup is this. Our second model is this. We have this. We have this created before the break of structure. Price come, take out the inducement, and then go. This is our second model. You know what I'm trying to say? And then the third model now is this. After the sweep of liquidity and the break of structure, price will come, create an inducement liquidity for us, but fail to take out the previous high. So it failed to create a second break of structure. Remember, if you do this, then this is going to be our first model, but this, it failed to take out this this high, and then it will now do something like this. Let me show you. It will now, price will now do something like this. It will now give us an inducement, but fail to take out this high. It will come, let's say stop here like this. After stopping here, you will not know that okay, after price gives you something like this, this is now going to be your inducement. It is going to be your inducement, and you'll be expecting price. Let's say you then have an imbalance that's staying here below. Remember, the imbalance is not a must. The fair value gap is not a must. So after, let's say you now have a fair value gap here, you will take your trade, place your entry here, and target here. Let's say I'm using a 50% of the imbalance, and that's it. This is going to be your trade. You get what I'm trying to say? Then the scenario, in this particular scenario, you are going to be expecting price to come back, take this out, trigger your trade, and hit your TP. This is exactly what you will be expecting for the third model. The third model now, price don't necessarily need to hit, doesn't need to give you a second break of structure, you get, but so far price give you a valid inducement, you take your trade. Now let me sink this in for you guys. If price give you something like this, if you have something like this, you have a sweep of liquidity and a break of structure without any inducement, there is no inducement at all. If price give you this without any inducement, expect price to come back and take this as the inducement, then before you go up. That's just the simple. So if there is no inducement, then expect the strong high or the strong low to be the inducement. That's just basically what it is, guys. That's just basically what it is. So in the third scenario, the third model, we have this. So in our bearish, in a bearish scenario, this is what you're going to get. Let's say we have a higher low, higher low. You have a sweep of liquidity, you have a break of structure, then price comes back here, give us an inducement give us an inducement, and then fail to break the structure. You get what I'm trying to say? So this is now an inducement, but it failed to create another structure. Now if you look at it before, other people will be looking at this that, oh, this failed to create another structure, so this is now the weak high, sorry, and with every weak high you expect it to be taken out. So that's just another way for me to explain the fact that the inducement needs to be taken out. So after this inducement has been taken out, you now expect price to come back here, mitigate your fair value gap, mitigate your order block, whatever it is, or you can just place your order on the inducement, your entry on the inducement alone, and after price takes it out, you expect price to what? To go down. You get? So now this is exactly the third model. The third model, this is it. This is going to be your inducement, this is your break of structure. So should I say I'm too lazy to be marking it, should be labeling it now, but this is just this same thing here is the same thing that is here, just that this is for a bullish scenario and this is for a bearish scenario, guys. Okay, so let us jump in to show you guys examples. Now for this particular scenario, remember after showing us this entry, this example for the first model, remember there was a second model that I wanted to show you guys that I had to cut out because it's actually the third model. So I'm going to show you guys now. Let's go to the 5 minutes. I think that was where it is. I believe you all remember this trade. We have our break of structure, sweep of liquidity, break of structure, price came back, give us another break of structure. This is our entry, and I played the 50% of the fair value gap. See, there's no fair value gap here on the 5 minutes, but it was there on the 15 minutes, and this was the trade. Okay, so if you look at it, this one happened on Thursday. On Thursday, is it the 13th or what? Yeah, the 16th, and this is the 16th of February 2024, and this is the trade. As you can see, we have our sweep of liquidity. I marked it out for us in the okay, sorry, I cut it out so you wouldn't have actually seen it. So this is the sweep of liquidity. We have our break of structure with momentum, you get, and then price came back, failed to give us it gave us an inducement but failed to create another high. See, this our trend fails to create another high, and after you've seen that price has failed to create another high, you just know automatically that this is now your liquidity, your inducement liquidity, and then you expect price to come. See this fair value gap here. You place your trade on the middle of the fair value gap, you cover the high, and look at exactly what happened. It just dropped, like massive drop. You see, this thing happens again and again and again. If the model 1 doesn't happen, the model 2 is going to happen. If the model 2 doesn't appear on the chart, doesn't give you an entry, doesn't give you a setup, the setup is going to come with the model 3. So it depends on which one it comes in, but the rules are the same. So the rules are the same. The A leg has to follow some certain rules, as in the rule 1 has to be fulfilled, the rule 2 has to be fulfilled, the rule 3 has to be fulfilled. As you can see, this is the target. You get, this is the target. If you enter this trade, you have be targeting this place, but me, I didn't target here. Why? Let me show you why I didn't target here. Look at it. Why I was targeting here as my trade. If you look at it, we have our sweep of liquidity here, and then we have our break of structure. Sorry, you have our break of structure. After having this break of structure, what the price do? Price give us another break of structure here, creating an inducement for me. Can you see it? Creating an inducement for me. That's why my target is here. It's shifted. That's why this was my target. That's why this was my target. You see, after creating an inducement for me, this was my target. Look at it. There's a fair value gap here too. I would have actually played, actually entered from the 50% of this fair value gap, but I didn't take this setup. I didn't take it. Price didn't come to the 50% till this point, and this is the high. This would have been the target. You get what I'm trying to say? It would have been a target, but I didn't take this trade. Though it played out fine, but I didn't take it. I'm not going to lie to you guys, I didn't take this trade. But I saw it, and this was why I played. This was why this was my this was my target. As you can see, if not, my target is supposed to be here, but if as you can see, it wouldn't give me a very good risk to reward ratio. It wouldn't give me 1:3. It gave me 2.53, which is not my target. So my next draw on liquidity is what? It's the inducement of the possible bullish scenario model A setup that form. So I was expecting price to take this out, and price did. So after taking this out, this was a possible setup that happened here. Though I didn't take the setup, but as you can see, it still works, guys. It still works. The model 1, model 2, model 3 happens all the time on the market, and it still works. If you take this one, remember, if you're taking this trade, this thing give you 1:4.5. This one gives you 1:3.17, and then you waited for a bit, and then you catch this other one again. This one gives you a 1:3.25. Just imagine, for just, should I say, within 2 days, alone, this would have given you around, let's say, around 11-12%. You get what I'm trying to say? So this is just amazing, guys. This is just amazing. Let's see if we can find other models, other examples for this model 3. Let's see. Okay, this is the 5 minutes. Let's go to the 1 hour. Sorry. Let's see if we can get another setup. Now this will look like cherry picking to you guys. Okay, now let's see. This is the reason why I was saying that this particular point, that after learning all the models, that this is going to make a lot of sense to some of you guys. As you can see here, we have our sweep of liquidity here. We have this break of structure that happened here, and before the break of structure happened, what do you see? What do you see? As you can see, there's a sweep of that inducement that happens here. In this scenario, if you had played the QMR or played this particular level as the order block, you would have missed this particular trade, and look at how it would have taken you sorry, it would have taken you out. Sorry, you would have missed it. Sorry, you wouldn't have taken you out, you have missed it. And people that have could have taken this, that would have been in profit. I'm saying this because I missed this particular trade. Yes, I missed it. I saw it, but I missed it. My entry was around here, so I missed this sell, and this is what happened. What do you see again? What do you see? What do you see? Can you see the models that are forming? Let me show you. A sweep of liquidity here. If you can't consider that one, you can consider this one the sweep, or you consider this one the sweep. Then we have this that happened here, a break of structure that happened. After this BOS that happened here, there's another one that happened here. There's another one that happened here, another break of structure. Then what do you see? The break of structure that happened here gave us an inducement liquidity. Now, looking at this inducement liquidity now, some people, as in getting your entry here, will be, you have to cover this high, which will be too much. You get what I'm trying to say? So in this particular situation, you would have played the order block. Let's say you played the order block. This would have given you a very nice risk to reward. Very nice risk to reward, which is going to, and your target is your root 3. Your root 3 needs to give you a feasible target. You see what I'm trying to say? So this is the 1:5.2 something. Let's say you are the type that doesn't refine your order block. This will probably be your order block. This will have been a 1:3 point something. Also, you get what I'm trying to say? Just playing off of this. This is the model 2 setup. This is the model 1 setup. This buy is the model 1 setup. And then if you look at it from the 4-hour now, you see the setup that I was talking about here. Which setup is it? Which setup is it? Which setup is it? Look at it here. As you can see that this happened here. We have a break of structure here, but this is not visible here. This was where it happened. This was where it happened. Look at it here. This break of structure, it happened here. And then after giving us this, what can you see? There is, now my chart is very scattered. Let me clean it up a little bit. The time, there's no time for us again. There's no time. Okay, so let's say we have this now as your liquidity. You get your inducement scenario. This is a break of structure that happened here, because if you're looking at the body, there's a value break of structure here, and then this is going to be your entry. As you can see, it happened here. This is going to be your sell. This is going to be your target. So guys, this is it. I'm going to be ending this video here, but before that, I want to ask you guys a simple question. I want you to answer me that question in the comment section. Which model do you think this last sell setup that I just showed you here is? Which model is this sell setup? Give me your answer in the comment section. Thank you.